So in the overnight session, buyers were active at the 51.8175 to 91.75 support, and from there we saw a bounce back up into the 52.18.5 high volume node, where so far sellers have been active. Now heading into the open, our intermediate term bias will be neutral bullish, and our short term bias will be bearish. And unless we're seeing very clear signs of sustained upside momentum in real time, the expectation is for sellers to be active at almost every area of resistance on the way up. Now, if the market is truly weak, then ideally we want to see sellers holding ES below the 52.17.5 to 24.5 pre-market resistance, followed by a breakdown below the 52.05 quarter to 12 aggressive support. And if we're holding above the aggressive support, then it tells us that there is still some level of strength in this market, and a breakout above pre-market resistance would also be a sign of intraday strength, and that can then lead to a test of the 52.28.5 level as well as the initial resistance zone, where sellers can be active on first test, and a breakout above 52.30 to 40 would be an intraday bullish indication, and from there ES can test the 52.44.5 to 51 area, where again sellers can be active on first test, and the higher the market pushes, the better the odds of sellers stepping in. And on the upside, the 52.60 to 67 and the 52.74.75 to 80.75 are two zones that have potential to cap the upside on the day. Now, remember, that's in the event that we get a sustainable breakout above pre-market resistance. Given that the short-term bias is bearish, ideally, we want to see sellers holding ES below pre-market resistance, and a break and hold above pre-market resistance would certainly be a very notable sign of intraday strength. And in order for the day to then turn bearish, we would still need to see a break back below the pre-market resistance zone. So you can think of 52.17.5 to 24.5 as the intraday bull-bear zone, where if the market is holding above it, then it tells us that at least on the day time frame, the buy side is more dominant, and if the market is going to head lower, then we want to see ES holding below 52.17.5 to 24.5. So that means if we break out above pre-market resistance and then find sellers at initial resistance or 52.44.5 to 51, in order for the day's bias to then become bearish again, and in order for sellers to then regain control, we would need to see a break back below 52.17.5 to 24.5. So in that sense, you can think of this as the intraday bull-bear zone. And on the downside, we want to see a break below the aggressive support. Again, if ES is holding above it, then it tells us that there is still some level of strength in this market. And a break below the aggressive support can then lead to a test of the pre-market support at 51.94 quarter to 97 quarter, as well as the initial support zone at 81.75 to 91.75, and we will need to see broad market weakness and sustained downside momentum in order to get a proper breakdown below initial support, and a break and hold below initial support would serve as an intraday bearish confirmation. So initial support is key, and if this short-term bearish bias is going to play out and turn into a larger downside move, then we need to see a breakdown below initial support. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market resistance zone as well as the aggressive support. That's going to provide us with the earliest indication as to which side is being dominant on the day time frame, and we'll take it from there.